Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is June 24th, 2025, and we're diving into AeroVironment's latest earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. AeroVironment has just released their fiscal 2025 fourth quarter and full year results, and there's a lot to unpack, from record revenues to strategic acquisitions.
Revenue and profitability overview. Let's start with the top line. AeroVironment reported a record fourth quarter revenue of $275.1 million, a 40% increase year over year. John, what drove this impressive growth?
The growth was primarily driven by higher product sales, particularly in their loitering munition systems, which saw an 87% increase. This, along with strong performance in their McCready Works and uncrewed systems segments, contributed to the revenue surge.
And how did this translate into profitability?
Net income for the quarter was $16.7 million, with an adjusted EPS of $1.61, significantly beating the forecast of $1.44. This was achieved despite a goodwill impairment charge, highlighting their strong operational performance.
Strategic initiatives and acquisitions. John, AeroVironment has been making strategic moves, including the acquisition of BlueHalo. How does this fit into their overall strategy?
The acquisition of BlueHalo is a strategic move to enhance their defense technology portfolio. It adds innovative products and capabilities that align with AeroVironment's focus on integrated solutions across modern warfare domains. This positions them well for future growth.
And what about their bookings and backlog?
They reported record bookings of $1.2 billion and a backlog of $726.6 million, nearly double from last year. This indicates strong demand and sets a solid foundation for future revenue streams.
Operational efficiencies and future outlook. Let's talk about operational efficiencies. AeroVironment's gross margin fell slightly to 36% due to certain amortization expenses. How should investors interpret this?
While the gross margin dipped, it's important to note that this was due to a one-time accelerated intangible amortization expense related to their UGV business. Excluding this, their operational efficiency remains strong.
Looking ahead, what is AeroVironment's outlook for fiscal 2026?
They've provided a robust guidance with expected revenue between $1.9 billion and $2.0 billion, and adjusted EPS between $2.80 and $3. This reflects their confidence in continued growth, bolstered by the BlueHalo acquisition and strong market demand.
Key takeaways. In summary, AeroVironment has delivered a strong performance with record revenues and strategic acquisitions, setting the stage for future growth. John, any final thoughts on their investment prospects?
AeroVironment is well-positioned in the defense technology sector with a strong backlog and strategic acquisitions. Their guidance for fiscal 2026 is promising, making them an attractive option for investors looking for growth in this space.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on AeroVironment's performance in the comments below.